Hi everyone, this is Darren from Fast Track Property. What's up? Today I want to share with you a lot about taxes because right now we are in the season of declaring your taxes to IRAS, your personal tax, your property tax, and today I want to talk a little bit about that because I felt that before I go into the property taxes, I want to have a little rewind for us to understand how to declare our taxes in a better and smarter way. Okay, so one of the things that I met is that along the course of my journey here, I met many business owners that I felt was a bit strange because they put a lot of money in terms of their personal pay, which I felt that would not be the smartest way. So just to understand a little bit is that if you have been following all my videos, you realize that whatever monies you put into your CPF has to be returned to your CPF with the accrued interest over the years, correct? Alright, so for example, if you are running your own company and you decide to pay yourself a $6,000 salary, right? A $6,000 salary means to say that you only will take back 80% of that, of which $1,200 goes into your CPF, right? And your company which you own have to also put in another 17%, which is about another $1,000 over dollars, which I felt is a bit exhausting and it's not really necessary, alright? And if you think it's because if you do that, you can get a better loan in the bank, I wanted to actually get the myth out because everyone has a very misunderstanding and misconception of how the bank works and how personal income declaration works. No matter how I explain to them, they didn't seem to understand it. So I try to break it down to make it as simple as I can for you to have more clarity in that so you can have a better declaration and better savings on your company payments, okay, and better savings on your personal income tax, okay? So declaration of income tax will actually be equates to the how much loan you could take personally if you take on a housing loan or if you want to buy that sports car, isn't it? Alright, so now if you go into that, you realize that whatever you put into your CPF has to be paid back in the CPF, right? Okay, and there is no need for you to declare a $6,000 income or higher because you spend more money, put more money into your CPF, or which you could use that for your property, but understand that that goes back again as CPF, right? And whatever your company pays out in your CPF, you actually reduces the profits of your company. So what I normally do is that because I run a beauty business on the side with my wife, my income, okay, I still have a CPF contribution, right? I have two companies out there running, of which they pay me only $1,300. So can you just understand at $1,300, it comes out to maybe 20% of that will be about $1,200, right? Yeah, more or less. And the company pays 17% of that $1,300. Okay, and this will have to be declared under the auto inclusion schemes. If you do that for your company, the income will be recognized that as an employment income. Okay, so what you do by end of the fiscal year or whichever month your company fiscal year begins, okay, meet and speak to your accountant because there are two types of income you're paying. And you are able to juggle with this. Why? Because if right now you have more in your personal tax, okay, you could then put more in terms of company revenue. For example, if your company taxes is only at 10 to 11%, and right now with the additional income that you're going to draw from the company, you will pay 12 to 13%. It will then make more sense to leave the monies in the company and declare at the company revenue. All right. And if, for example, the company revenue taxes is much higher, and if you declare this more income into your personal income, it has a lower tax bracket. What do we mean by that? End of fiscal year, you can actually draw out something called the director's fee. And director's fee is paid in cash. You do not need to put a single cent into your CPF. Okay, so let's take for example, if you were to declare $100,000 in terms of your personal income, and you realize that, hey, by adding on another $20,000 or $30,000, the company taxes and your overall taxes, company and personal, comes down, right? So your company will then sign a declaration and says that there is a director's fee paid to you of $30,000 and you declare that in your personal income under employment. You follow so far? Okay, so this is what you actually talk to your accountant to juggle that so you have more monies in cash and you do not have to return to CPF that much plus interest over the years. Alright, and number two, when you want to declare your taxes, for me, I put a lot of money under my wife's name. Why? Is the whole reason is because there's a lot of deductions that the ladies and mothers enjoy, but the mom must still be working. Alright, if you're not working, you do not enjoy this working mother child relief. Alright, so now let's just go into, I'll just show you an example of my wife's income for the previous year and how we declare it and what that makes sense. Just understand something is that for your first child, you do enjoy a 15%, alright, is the of your earned income in terms of your child relief. The second child is at 20%, the third child is at 25%, and do get this, this is based on a percentage of your earned income. Alright, and no matter how much you claim, the entire relief will only be at a maximum of $80,000 a year. If it's beyond that, it's still kept at $80,000 and the rest will be chargeable income. Okay, come. So now let's just show you what I meant over here. Alright, so you can see that over here is my wife's income. So altogether, we have actually 3 types of income: trade, right, employment, and property. Okay, so I'll go into this in a short while. So whatever amount that comes here under the total income, right? Okay, for example, if you put $200,000 over here, this will be the amount that the banks will recognize. Okay, so do not worry about that. This is the amount the banks will recognize. As you can see, after all the personal reliefs, right, this is the amount which is net taken off, and the rest will be your chargeable income on over at this part. All right, so if you're very concerned, right, that you have to have a higher employment income because of the bank's loan eligibility, right? Rest assured, it's not like that. They take everything, your trade income, your employment income, and your property income, everything, and they'll take a haircut of 30%. So it doesn't really matter if you have a high employment income, if you are the director of the company, because they will still do the haircut for you. If you own any company, you own more than 35%, they will still do a haircut. It doesn't matter how much you're being paid, okay, in terms of your employment income. Alright, so over here is what you can actually look at, which I felt is much better. So I just repeat again, the banks will access this 200K for your TDSR, and how much you pay and how much you declare over here is really up to you. Right, so I personally feel that you do not have to do that. If you were to declare under your director's fee, it falls under the employment. Alright. Okay, trade income is for me because I'm doing property, so this is my trade income, and property income will be whatever that you have been listing out your other properties under your name. Alright, so does it now make sense to you? Okay, so there's no need for you to do that, to put all your monies and declare a high income for yourself. For me, I just put at $1,300 because I would need my one head count for my business, because I actually employ foreign workers. Okay, so there's no need for you to do that. I felt that this would be much better. The bank will do recognize, and please, if you have not really enjoyed, because I didn't realize this about 2 years back, that I could actually claim $80,000 child relief. So that's what I did. But one thing good about IRAS is when I called them back and I said that, hey, I actually didn't enjoy that at that time, are they able to give me back the subsidy? And guess what? They actually did. Okay, so this is really great. Now, once you understand this so far, okay, we move on to property tax, right? So many of you here have your own second property which are leasing out, all right? And by today, you should have already received a payment structure from a bank for the past 1 year, what you have paid off, and what is actually the interest portion that you can actually use to subsidize for your property taxes. So take for example, if your property tax, your property declared income, you've been renting this place for $3,000 a year, all right? So $3,000 a month, a year is about $36,000. And if your interest, if you have already been paying for this property, it comes up to $10,000, right? And if this is under 2 names, you split the $26,000 into 2 parts, and this adds on to your personal income tax. If you own this under your own name, then you only will have to pay, you have to declare this whole amount under one single name. Now, what can you use to reduce these taxes, right? Number one, if you are very lazy and you just want to use a default 15%, you could do that, alright? And just click on the 15% and submit it, and then it is true. But if, for example, you did some improvement works into that property, you did actually engage a property agent to help you list out your place, these are the various possible tax reduction you could use and you can declare it, right? For example, if you change the air conditioning, it's $3,000 for all the rooms, for example. You can throw that into the expenses. Okay, there is an unchecked button whereby you can do a separate, you can do a separate declaration for the different parts, alright? So you can do that. You can also remove your property tax, you add that in. You can also add in your maintenance, alright? So these are the few things, and plus your personal interest, the interest paid to the bank. These 4 items you can actually throw in to actually reduce the payments of your taxes, alright? And if, for example, you can ask if for some exemptions in terms of your rental rate, for example, that place has been vacant for 3 months. It could be have taken you 3 months before you could actually find another tenant, right? So you just calculate the other 9 months that you actually had that, all right, and you can waive off because they will actually assume that you have rented out this place for the whole 1 year. Alright, so I hope you have enjoyed yourself in terms of reporting your taxes. Alright, if you do not understand, or maybe you have a different experience from what I had, whatever I just shared with you, please comment below so we can all share together as a community, and I'll speak to you soon.